So as we know, the ETH merge was officially successful and we are now in ETH 2.0. So a new era has begun. So the question is though, who is going to be squeezed first? Is it going to be the shorts or the longs? Because Ethereum seems to be consolidating in more or less exactly the same place that it's been in for the last couple of hours or even days actually. It's sitting just below $1,600. Current price is $1,590. And not much has happened. A lot of people are wondering, why didn't Ethereum just magically start pumping? And the people on the other side were waiting for a post-merge dump are also sitting holding their thumbs, wondering, well, what's going on? Why hasn't it dumped? So we have a lot to cover. Let's get straight into it. First and foremost, I wanted to start with this tweet over here by Alex Kruger. And he says that ETH just went from extreme backwardation to small contango. I hope you know what that means. I'm assuming most of you don't know what that means, so I'll explain to you. Essentially, what it means is that backwardation is when the futures price of a asset is a lot cheaper than what the underlying asset would be, meaning that essentially a lot of traders out there or funds that were looking to protect themselves from the downside would have been buying what they call puts in options trading. So that essentially pushed down the future value of the Ethereum price, and the underlying asset costs more than what the actual future price of Ethereum was early on today. And then now it's moved into contango, meaning usually markets work in contango. It's rare that you get a backwardation case in the markets. Anytime that there is extreme backwardation in markets is usually an indication that there will be some sort of mean reversion play, and therefore you'd be wanting to buy that asset expecting that it will go back into contango, and the way that it goes back into contango's price will usually catch up and get to a more even level playing field. So looking at this tweet over here, we see it's a historic day with the finalization of the ETH merge. ETH derivatives markets are normalizing. So in agreement with the previous tweet, futures curve is bouncing back from backwardation, and there's a massive drop in the skew and the IV, which is the implied volatility essentially. And you can see that through these charts over here, everything seems to be coming back into a more normalized fashion. And this is what we said. We said beforehand that, look, well, at least on Rand Show, that probably nothing major happens. Everybody's just going to wake up and ETH uses less electricity and things carry on as per the usual. But with that being said, you have to ask yourself, well, this was a very hyped event, right? And we are, in fact, in a bear market. So now that the hype is gone, what now? What next? Now that there's no hype, it means that there is risk to the downside, and we're going to have a look at that. So I wanted to look at these charts for both Bitcoin and Ethereum on a high time frame using a 3-month chart. And the reason why is also because we are nearing the end of September. We have 2 more weeks left. That's going to be the end of the quarterly close. Very important. Big funds and things are starting to, they'll be looking to rebalance their portfolios, make changes, closing options, trades, all sorts. So this is an important chart to look at. And you have to ask yourself, the way I want you to look at these 3-month charts is you need to be simple and rational about it, and ask yourself, if this chart were a 5-minute chart, 10-minute chart, a 1-hour chart, 1-day chart, any time frame, how would you trade this? If you knew this chart was going to play out over the next couple of days, how would you play this chart? And speaking for myself, I would say, look, I probably wouldn't just buy here. I don't really have a great level to enter. The best case scenario from a bullish perspective is that this would kind of consolidate within this range between about $880 and $2,000. And then I would basically be looking for opportunities there. But as you can see, assuming that I were to trade it as a 5-minute chart like that, I would be short selling near the top over here, and I'd be accumulating in the bottom. That is assuming that this chart were to be following some sort of a range. And I think that would be one of the best case scenarios. So therefore, it's kind of in the middle of no man's land for me at the moment. I probably wouldn't be looking to build long-term positions on ETH at this exact level, if I am honest with you. And Bitcoin looks a bit worse actually than Ethereum. At least Ethereum managed to hold the body of its candle green, whereas you can see that Bitcoin has been left with a massive wick behind. And same story, if this were a 5-minute chart, I 100% would be targeting this bottom region over here where you have a yellow diagonal line that also matches up with a strong horizontal. And if it were to happen in this exact month, that where my cursor is exactly $10,542 for Bitcoin. So something very interesting to look at. And you need to also ask yourself another question. I want you to type in on Google the psychology of a Wall Street investor cheat sheet. So it's this one over here. And ask yourself, where in this emotional cycle do you truly feel that you are? So looking at hope, optimism, belief, thrill, euphoria, complacency, anxiety, denial, panic, capitulation, anger, where in this cycle do you believe you are? Look, I think, let's just be honest, we can probably all rule out the top sections over here. There's no thrill, there's no euphoria, and there's not really complacency. Probably not really anxiety either. I think we've passed denial. I would feel that panic we've probably done as well. Then you get anger again. It probably is going to be somewhere between disbelief, somewhere around hope, maybe optimism. That's a possibility. I don't know. Let me know in the comments. I'd really appreciate your thoughts. But let's see what the other charts are showing over here. Bitcoin on a weekly chart. I just wanted to focus on one exponential moving average here, which is the 21 EMA. It's the yellow one. And I'm going to show you the same thing on Ethereum. And you'll notice a lot of similarities, right? And you can backtest this. I have brought this one up before, but it was months ago. Anytime that Bitcoin price is holding above this EMA and it's angled upwards. So two important criteria: hold above, and it must be angled upwards. You're in a bull run, and it's a fantastic time. We're all having fun. We go to the top. And anytime that it's caught below that and it's angled to the downside, then you're typically in a bear market and it's not so fun, right? So looking at Bitcoin over here, you'll notice that this push over here, we were a mean reversion play. You were attempting to get into that 21 EMA, which would have taken price at that time to around $28,000, which was also the CME gap, by the way, which has a high probability of being filled. We failed to clear that level. We didn't even get there, and we turned back down, and now the same thing is happening again. Ethereum, you can use this in almost exactly the same way, and have a look at that. You had the big bull trap coming in around $3,400, and then price pushed perfectly into that with a rejection off, so failed to close above. Second, the next candle opened above, but immediately pulled back down, and now we have another sort of mean reversion play where it's kind of pushed Ethereum into that 21 at about the 21 EMA at about $1,800. And now look at that, price is coming down. So you kind of, if you are an Ethereum trader, you kind of want to put your line in the sand over there as a bull at $1,487. If you start to take out the wick low of the previous week over here, that would look quite bad. Things will start to turn down very, very quickly. And I always like to give both cases. I'm not some perma bear or anything like that. The bullish case, well, if you're able to take out the previous week's high and reclaim this yellow moving average, EMA, and hold above that, then maybe this was the bottom and things can start to turn around. I definitely lean a bit more bearish from my own personal opinion. That's the way that I feel. Looking at another very important chart is the NASDAQ, of course, the stock market. So we got the series of low highs, as you would know. I'm looking at the market open for today. Pre-market, I don't know if you can see that on the chart. That orange line is showing pre-market. It is looking to open to the downside. And then the question is, what happens next? Now, I put a line over here. I'll make it bigger so everybody that's watching can see that nicely. So 290.87, that is the previous wick low on the NASDAQ. If that area gets taken out today, I would expect that this will be a massive continuation to the downside. And my next support target is going to be in this area at about between 275 and 280 points on the NASDAQ. However, with that being said, I don't think that will be a major bounce area. I would be looking for something like this. So price comes down, breaks that area, it will probably hit into that support, small bounce, probably reject off there, and leading into end of the month, end of the year. I don't want to really make a call on timing, but I would expect to push all the way down to the key quarterly level, which on a chart you can see looks like this. There you go. So you're looking at those pre-COVID levels over there. VIX is historically, this 20 20% level, the 20-point level, is often where you get reactions out of this area. It doesn't really stay below that for much longer. An expanding VIX is usually a decreasing stock market, and you'll see that on the S&P 500 and the futures market. So I do think that this is starting to establish an uptrend. We had the falling wedge, it broke out to the upside, and now it's starting to just make higher highs and higher lows. So a lot of volatility will be in the markets, as you would know. We do also have the FOMC that's coming up. So TED Talk says here, in terms of narratives that drive the markets next week, a hawkish FOMC. So the Fed meeting, if they come out hawkish, meaning aggressive, and they're talking pretty much badly about the markets and how they're going to raise rates, that would have a much bigger impact than what a successful ETH merge would have. So take out your Forex Factory calendars and mark those dates off, because we have that coming up next week. It's on the 21st of September. Expect absolute huge volatility on next week, Wednesday and Thursday. FOMC statements coming out, economic projections, federal funds rate is coming out as well. Then you have the FOMC press conference. And then the next day you have monetary policy summaries and policy rates and assessments are also going to be coming out. So these are things that are most likely going to move the markets. And I think that will be the main catalyst that's going to drive price direction for basically the next month or two and leading into the end of the year. Looking at Bitcoin on a 3-day chart, high time frame, also using our MACD. I'm just zooming out because I kind of want to give you some perspective over here. So you got what I labeled here as final support, essentially the 2017 highs. And when you do look at this picture, look, guys, like you got to be honest with yourself. I feel like the sentiment is quite bullish at the moment because of the ETH merge, but this is not good. Like this is a straight downtrend over here. You do have the MACD, which is the histogram is starting to turn back down over here. So it's been losing steam. Try to pick up a little bit there, losing steam. If these start to cross back to the downside, then you can expect downward momentum over the next couple of months. And, once you lose this level, and I have mentioned that, let's just quickly fix that. I have mentioned that many times before. This is very minimal support in this area. This is thin air over here. Once price slices through here and closes any 3, 4, 5-day candles underneath here, I would expect the acceleration to the downside to happen very, very, very quickly. So I'm keeping a close eye on that. However, with that being said, you can be a bull here if you want. It's all about having your invalidation levels. So if you want to be a bull here, great. This is what you want to do. You want to enter as close to these previous wicks as possible. You want to set your stop loss, something like that. So have a look at what all the other previous price action is over here. Ask yourself, well, if we probably break below that previous wick low, which was at 1,785. So I'd put my stop loss underneath there and I'd enter my position as close to this line as possible. You as a bull, if you are a bull, would be hoping for some sort of a deviation. By the way, I don't know why you would do this, because you literally would be trying to go long in a downtrend. But if for some reason you do, this is the way you want it. You want to see some sort of a deviation below that important support line over there, and then boom, straight back up like that. That's what you'd be looking for. However, I personally would rather sit in my cash positions, which is what I am doing, and wait for a better buying opportunity, which patience is a virtue. You just got to be patient. Eventually, it will come. Looking at Ethereum with the same sort of picture, looks very, very similar. Here you got the previous all-time highs. This year already had a couple of closes underneath. But more importantly, looking at the histogram of the MACD, same thing, running out of steam, try to pick up a little bit leading into the ETH merge, ticking back down. Once you start to get a couple of red ones, then the momentum will start to build to the downside. And I know there'll be a lot of people out there that will say it's a lagging indicator, but it's all about back-tested strategies. It's worked before, and it just gives you the overall directional bias for that asset. So very, very important chart over here is Ethereum using the Super Guppy indicator. When you look at this chart, it looks very, very bad. I would say that is 100% another confirmed local high. So you got your local high there. You now have another confirmed local high over here. Price is closing underneath that resistance area. What should have flipped into support is now a resistance area, and it could get ugly very, very quickly. It could fall out of bed. I know that there are a lot of people, by the way, and this does make sense. I want to agree with the views that the bulls would have, where they are targeting $2,000, $2,500. But the only reason why is to capture liquidity, which would be extra steam to send price further to the downside later on to end the bear market, to finally end the bear market. And I'm looking at it something like this. So the bullish scenario would be a reclaim of this resistance area, recapture that, okay? Then price gets sent up just above 2,000. You probably clear those highs. You capture some of this liquidity that's on the left-hand side over there. And then I would expect a deviation. Once that happens, that would be my trigger and confirmation. So if you, what you would want as a bull is for it to recapture this and then retest on that key critical level at about $1,990. That's the level that you want to see price come back, form the next high low and bounce. However, I would expect a deviation like that. That's the only bullish hope that I have, is that price pushes up. But at the moment, it's very hard to give bulls any benefit of the doubt here. It looks bad. It's stuck under strong resistance. Like, what else can I say? I'm just being honest with you guys. Bitcoin over here, similar picture. There's its primary resistance over there, also stuck below the resistance. So possible that it could get more downside. You have the super guppy indicator, the red lines here, which are now starting to also open up and expand a bit more. So keep an eye on Bitcoin. Your line in the sand is going to be that wick over there. So if you were to go long, by the way, that's also fine. If you were to go long, same thing as what I said with Ethereum over here. Let's just grab this tool over here. You'd be looking for something like this. Let's say you're going to long from right here where current price is. You'd be longing straight into that resistance, and your stop loss should be underneath the previous wick on the previous daily bottom. The low of yesterday would be where your invalidation level is going to be, and that still gives you a risk to reward of 1 to 3.6. So not the end of the world. You can probably push a little bit higher and get like a 1 to 4. So moving on, looking at the daily chart over here. I forgot to mention this yesterday, and I wanted to. We're looking at this trend line over here with the RSI pushing into that, came back down, pushed into it again, came back down, and we had a rejection from this zone over here, and that's what led to that massive move to the downside. So same thing as the previous chart, because this is a daily. This is kind of your support line, but the more times that this gets tested, the more damage is done, and the eventual breakthrough is pretty much just getting closer and closer. Very, very important. Price is now stuck below the previous, I think it's stuck below the previous all-time high. I have here at 20,800 as your next key level. So what you would want as a bull on Bitcoin over here is a reclaim of that level. If price can reclaim this level, it would open up the opportunity for a quick long back into this box at the range highs, which let's measure that out as a percentage. So if it were to do something like that, that's about a 9 to 10% move. So for a leverage trader, you can actually make some decent money on that. But it's going to be the same thing as what I've said this whole week, guys. You'd be longing straight into resistance. You got the diagonal coming down. You have the horizontal. Doesn't really seem like a good risk to reward for me at the moment. I prefer to sit this one out and just wait for the FOMC. Like, I don't need to rush any sort of trades or anything. You need to hold on to your profits. When you make good money, hold on to those profits. Okay, looking here at, shout out to PrimeXBT, my sponsor. They make these videos possible. If you do wish to join other subscribers who have joined the platform, then have a look in the description below. There is a sign-up bonus of $7,000, I believe it is. Here you go. It is here. Just make sure that you use the promo code Kyledoops if you are going to join. Otherwise, you won't be eligible for that up to $7,000 sign-up bonus. So lower time frame now, Ethereum, okay? Can see it's down about 3.6% over here. Let's just clear that up. I'm going to zoom out a bit. This is an 8-hour chart just to give you some perspective. this is the perspective. You can see things are getting tight, right? You have your lower highs, the diagonal trend line resistance marking all the previous lower highs. And then you have this one that's trying to hold as support now. Remember that the tighter you get into this wedge over here, the bigger the breakout or the breakdown, whichever way it goes, it's going to be a massive impulsive move. And I've put here a channel as well. And I think that price is going to kind of consolidate within this level. But if this zone at the bottom gets broken, which is coming in at $1,420. So if price breaks below that level, bears take back full control and you're definitely going to sweep the lows, possibly go even lower. On the contrary, if bulls are able to reclaim above this yellow line at about 1,800, then I would say they have a chance of challenging this $2,000 level. But you know my thoughts, I showed you in the other one. I would expect that just a recapture of liquidity, because at the end of the day, you would still be making yet another lower high in the greater scheme of things. And that would be a bull trap, in my opinion. Until this level gets broken, that would be a bull trap. You want to hold above all of this and you want to break this trend line. So be patient, guys. Be patient. I mean, it depends on how you want to trade, if you're an investor or if you're a trader. But if you are looking for high probability trade setups, I don't think that there's a strong one at the moment. So take it easy out there. We'll see what happens over the next couple of days as the Ethereum news begins to settle down. What about Bitcoin? Let's have a quick look at Bitcoin over here. And I have one more chart that I want to show you as well. Okay, Bitcoin on the 8-hour, I want to move it down to 4-hour chart quickly. So Bitcoin, as I did mention, I'd want to see it reclaim certain levels, looking for something like this, reclaim above this box over here, which is going to be your major resistance. Now, if you reclaim that as support, again, that's at about 21,800, then you can start to target the next zone. I had a chart here as well. Here it is for NIA with a potential spot long position. And I just want to reevaluate that for anyone that's not in the Discord, because that is where I've been dropping the information. You can see an attempted break of structure and reversal over here, starting to form a series of higher highs and higher lows. This area must hold as a higher low in order for this to be valid. Once you start to breach these lower levels at about $4, then pretty much this thing can go all the way down to $2 again. So that would be a 50% move to the downside. I'm not really, I'm not too keen on seeing how candles are starting to close outside of the diagonal trend line. That's not something that I want to see. However, it is still holding the 0.618, that golden ratio fib. Price wicked into it and has tried to bounce out, but you don't want to see too many candle closes underneath here. Otherwise, you probably want to drop the longs on NIA because lower prices could come into play quite easily. So know your invalidation. If you are in this trade, I would probably put my stop loss underneath the previous 4-hour wick. Give it a little bit of room, about 4.26, so 4.26 on NIA. If you start to lose that level, then try and catch another bid at the bottom over here, and then your stop loss would be underneath that level. If you lose that, then pretty much it's going to $2. So that's that one. Here's just another picture on a 1-hour chart using the fibs. Look, price came almost down to the 0.786 for Bitcoin. You have the 2017 high, which is coming in at 19,187. So price would need to hold above here, or it becomes very, very bearish very quickly. The white line that I've drawn over here with the arrow, this is just an example of what you'd want to see in order to turn bullish again. Again, it's at key level around $21,800. Price needs to push up, come back down, recapture that level, and then this is where I would flip bullish again, is over here. At the moment, pressure remains to the downside. Price consolidating like this, it could easily lead to another leg down. And then if you lose the 2017 high, then you have bigger problems on your hands. So I think that basically brings us towards the end, guys. Let's just have a look at this one quick. Again, this is Ethereum on a low time frame. So you can see the triangle here, right? The triangle that it's caught within. maybe there's a little bit of reaccumulation over here. If there is, by the way, if you're going to treat this like a triangle, it does have a measured move. So let's quickly put this in here. I'll work it out for you in a second. Put on 4-point. Okay, so if it breaks to the upside, you'd be looking at about a $1,980 ETH. See this trend line over here? That's all your previous lower highs, which I showed you on the high time frame. Isn't that interesting? Price would recapture the liquidity, just like I showed you on those other high time frame charts, and go straight into resistance. And then I think that's a bull trap. On the contrary, if it breaks to the downside, let's say it breaks from over here, then you'd be looking at about $1,300 ETH. So that's what you're working with, guys. If you enjoy this video, please make sure you like it, hit the bell notification and subscribe. I appreciate each and every single one of you. If you're not in the Discord, also have a look over here. All the links are in the description below. Use any one of these links, OKX, BitGet, BYBIT, any one of those links below, and send in your user ID. You'll see the instructions are all in the Discord, and then you can get into the VIP group where we can trade together. So until next time, I will see you all on tomorrow's video. I do apologize for the sound, by the way. We had a big sound issue earlier, so I've just switched to the old spaghetti earphones for today. And at least it gets the job done. Might not sound as crisp and clear as the other one, but we'll sort that out for tomorrow. Much love to all of you. Cheers for now. I'll see you all on the next video.